Short sale process in real estate. A real estate short sale is any offer of real estate that produces continues that are not as much as the sum owed on the property. A real estate short sale happens when a moneylender and borrower choose that offering a bit of property, in this way retaining a direct loss, is desirable over having the borrower default on the credit. It is along these lines a contrasting option to foreclosure, and it helps the borrower abstain from having an abandonment show up on his credit report. A short sale, also known as a pre-foreclosure sale. A short sale is a demonstration of selling a home or other kind of property for not as much as the sum that the present owner owes his loaning foundation. A short sale is just conceivable if all gatherings included, including the individuals who are owed cash, agree to take not as much as the remarkable commitment. Sales of this sort are in this way eased back and are known to fall through on a regular basis. A short sale is regularly as useful for the buyer of a property than it is for the seller of the property. Sellers who list their property in a short sale are ordinarily in money-related misery and need an approach to selling the property before foreclosure. This sort of sale secures a seller's credit to some degree. On the other hand, buyers in a short sale advantage through a decrease in closing costs and different expenses. A case of this would be if the borrower has a home loan with an extraordinary principal of $250,000 and a home estimation of $200,000. In the event that he chooses to sell the property, it would sell for not as much as the home loan amount and would be viewed as a short sale. The distinction of $50,000, minus closing costs and different expenses of selling, is viewed as the insufficiency. The loaning foundation is paid the contrast between the home loan esteem and the inadequacy. Despite the fact that a short sale harms a man's credit score rating not as much as a foreclosure, it is as yet a negative stamp on credit. Any sort of property sale that is meant by an acknowledged organization is not paid as agreed as a ding on a credit score rating. In this way, short sales, foreclosures, and deeds in lieu of foreclosure all adversely affect a man's credit. Short sales don't generally invalidate the rest of the home loan obligation after a property is sold. This is on the grounds that there are two sections to all home loans. 1. A guarantee to reimburse the moneylender. 2. A lien against the property used to secure the loan. The lien secures the moneylender in the event that a borrower can't reimburse the loan. It gives the loaning establishment the privilege to offer the property for repayment. This piece of the home loan is deferred in a short sale. The second portion of the home loan is the guarantee to reimburse, and banks can at present authorize this segment either through another note or through the accumulation of the LAC. In any case, loaning foundations must favor the short sale, and borrowers are in some cases at their impulse. Short sale process. The short sale facilitation process comprises of the accompanying 1. Contact the primary lien holder and make application to be acknowledged into their short sale program. Lenders won't engage any short sale contract with a buyer unless the property holder has first been endorsed by their program. 2. The lender ought to check that any administration projects, for example, Home Affordable Foreclosure Alternatives qualification, are investigated, including movement help to the borrower. 3. Once endorsed, the lender ought to give the terms of the short sale. Terms can incorporate absolution of any deficiency, money motivation for an effective shutting. The property must be recorded by a specific date, and numerous different motivators. 4. Talking with real estate agents and choosing the most qualified individual to sell with buyer's short sale. 5. It can be useful to get broker price opinion letter to build up an estimate of the property's present market value. This current BPOs must utilize comps in the prompt market. The property ought to be recorded at a more noteworthy cost to demonstrate the lender, the buyer is attempting to get the most elevated conceivable cost. 6. Observing the leaning to guarantee that it is proactively handled. 7. Consult with junior lien holders for a diminished result. Junior lien holders will get nothing in case of a foreclosure. In this manner they have each motivation to settle for an option that is instead of nothing. Junior lien holders are allowed to seek after an individual cash judgment because of any insufficiency this makes. Consulting to dispose of this is fundamental for the borrower. 8. Presenting the short sale offer to all lien holders and consulting with them to get the endorsement of the sale. 9. Working with the lien holders to get the arrival of any lack risk. 5 common buyer's mistakes: ignoring property problems, skipping the home inspection, ignoring legal and insurance information, leaving too little time for closing, falling hard for a bad home. Benefits for short sale: obviously, the buyer will make real estate agents upbeat since agents are cheerful to take listings. Retain some respect in realizing that buyer sold this home. The buyer won't endure the social shame of the F word, foreclosure. No mortgage payments to make unless buyer makes them. Buyer can meet the new owners. Buyer will be qualified, under Fannie Mae rules, to purchase another home in 2 years rather than 5 to 7 years. If buyer credit report does not mirror 60-day plus late pay, under Fannie Mae rules, the buyer will be qualified to purchase another home promptly. Drawbacks to a short sale: buyer may encounter a portion of indistinguishable downsides from a foreclosure, yet they may appear to be less extreme. Waiting for the bank to react to an offer is baffling. The bank will need to inspect individual records, for example, expense forms, ledgers, resources and liabilities, notwithstanding requesting a hardship letter from the buyer. Accommodating purchasers will mean keeping buyer's home in spotless condition for quite a long time or months until an offer is gotten and enduring movement through buyer's home. There is no confirmation the bank will acknowledge a short sale offer. The censorious credit will stay on buyer's credit report for a long time. For some sellers, however, the opportunity to purchase another home in 2 years is the genuine inspiration to do a short sale. A few sellers qualify quickly to buy again under specific terms. Great credit conduct can supplant terrible credit following 2 years, despite the fact that the critical will remain. For free samples of probates, inherited, foreclosures, absentees landlord, vacant, code violations, evictions list, visit www.realsupermarket.com.